All right, we are back again with another edition of the End of Day PulseWave Report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. All right, so let's take a quick look at what we are set up with tomorrow. Tomorrow is the infamous FOMC. We don't know if they're going to do they are going to increase the rates by a quarter basis point or a half a point, a full point, or nothing at all. We have no idea what they're going to do. They have been known to surprise in the past. They have been known to do that. So we really can't say with certainty what they will or won't do. So let's take a look at the markets that are going to be the most affected. Number one is the bond market. So this is ticker TLT. You see the increasing downward pressure, the selling pressure. We hit a new low today, and the market closed near the low of the session. All right, so this here is showing you that this market is still under pressure. All right, that has not ceased. It has not stopped. The market is doing something, and it's telling us that it's doing something. It's not ready to slow down, not just yet anyway. So we're watching this, and we see that the bears are in full control in this bond market. As long as this continues to be the case, it's going to continue to put pressure on interest rates. Interest rates have nowhere to go but up from here. You have falling bond prices, which means you have rising interest rates, rising yields. All right. So you can only keep them artificially low, but so long before the reality starts to set in. And this is what you see right now. The bond market is set up for more downside to come. All right. The next thing that's on the radar that we got to look at here, and we can't avoid it, would be the energy market, crude oil. All right. So here's the crude oil futures. You can see the market has come all the way down and touched the trend line support, just as anticipated. When we got this primary crash alert, here's your first target right here. So that has been met. Our initial downside target has been met in the crude oil. Next target will be the top of the Kumo cloud, followed by the bottom of the Kumo cloud. But for right now, I think the market can actually rally from this point. The bulls can come in and defend around this $95 handle, and this market can go right back up again. This is a good, healthy pullback. Okay. Now you've met your goal, but you're in a corrective state, which means that this could intensify and turn into a full-blown correction where you get the possibility of going back from a bull market into a bear market. So that's the nature. You have your trend, then you have your pullback. Pullback means prices typically like to pull back toward the trend line support. Okay. And then in a correction, they go beyond pulling back to trend line support. And that's where you fall over the cliff. You go into the Kumo cloud, things of that nature, and then possibly drop out of the cloud. And then we turn into a bear market. So this is a dangerous spot right now. If you're bullish, the crude oil, you're going to need to see some defense start to come in here. If not, this could turn from a pullback to a straight up correction. And you know how that goes. Next market that we are watching for tomorrow's situation is the US dollar index, which is still the world reserve currency, or at least people think that it is. So you see the bears have been keeping this market at bay, keeping it from going into par. Par is 100 or $1. So right now it's been flirting with the 99.50 handle, which is just inches away from going par. The dollar traditionally has a problem with staying above par. And right now, this is where you are. So the bears still have this thing on lock for now. You're in that red zone. And this is a part where the bears can come in and sell this 3-day rally that the market has seen. This carryovers into the ETF UUP. You can see it's tracking the US dollar pretty well. Still showing you that negative pressure. You saw that 3-day run up. Then you see the market starting to pull back down again. The next thing we got to look at is the flip side of the dollar, which is the euro. So here's your euro. All right, so the euro has had the 3-day down, which you expect, but it did something here on the 14th. We didn't really put in a new low, but made the market reverse. So right now, the foundation has been set for this market to correct topside, which means we see prices heading back up toward the overhead trendline resistance around the 112 mark would be our initial target for the euro. So that's what we're watching for tomorrow to see how this goes. So if the dollar weakens tomorrow after the announcement, then the euro should continue its upward ascent. The next thing we're watching here is going to be gold. All right, let's see how gold has been behaving. So on this daily chart, you see this big gap down today in gold, which means you got to have some type of back and fill for this gap. But you're getting close to hitting that trend line support around the 1880 mark. All right, so which means that you're dangerously close to the gold dropping back below 1900. Gold traditionally has had a hard time staying above that 1900. You briefly dipped into the 2000s, but couldn't hold it. You got that primary crash alert, and you got consistent downside production. And it ended today with a bearish pointer. So I think the market is going to go back below 1900. This is something that we're going to watch because tomorrow could be the catalyst for that. We will see. All right. And it should be noted that these markets can also reverse and go the opposite direction. It's just really going to be based on what the Fed does and then what they say in the press conference after the announcement. Last but not least, here's silver. So silver is doing just like gold did. You had this gapping down today, had the primary crash alert, and just continued downside production. $24 is the initial target. That's where your trend line support is located, and that's what we think silver is going in the immediate term. But like I said, based on what the Fed does tomorrow, and then what they say during the press conference will be very important. It'll be very vital to see, what the Fed sees going forward for these markets. So we're definitely going to be watching this. We'll see what happens, and Lord willing, we'll do a FOMC live session tomorrow. So be prepared for that. If everything goes well, that's what we're looking to do. You know what to do. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.